What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be taking a look at super micro computer stock because the stock is now up over 32% today. And if you watch my videos, you know that I did a video on this stock roughly 2 weeks ago. If we scroll down here, we can see that I was buying shares. I was buying shares, right? So this was just roughly 2 weeks ago. I looked into the stock, bought a small position because I knew it had a little bit of risk to it, but I still thought it was an attractive valuation because there was so much bad news priced in. I think a lot of investors thought that this stock was going to get delisted and that there was fraud going on at the company. And now today we find out that the probe finds that there's no accounting wrongdoing and there's really no problems going on with the company. So there was a lot of suspicious things, like the previous accounting firm said that there was fraud going on, and so they quit. And you just had a lot of weird things. You had See, it says the accounting issues came to light when the company announced earlier this year it was not able to file a 10K form for its fiscal 2024. So that was a problem, and their auditor also resigned, right? So there was a couple issues there. They're also getting a new CFO as well. But now that this news comes out, it's not really too much of an issue anymore, and now the stock should stay on the Nasdaq, and everything should be good. So if you look at this company's financials and you want to get an idea of what the right valuation is for this stock, we are looking at, so look how much the P ratio came down. It came all the way down to 17. This is like a week ago, right? So this is not all this isn't the most accurate data, but we can run the numbers right now. So in the past, the stock is traded down to a 6 and a 7, right? So things can get really bad for this stock, but that was 2 years ago when we were in a huge bear market. That's probably not realistic now. It looks like this stock wants to trade at around 10 to 20 times, right? So I would say like a 15 or so is probably right in the middle. And right now, based off of this year's numbers, you are paying 15 times earnings, right? So for right now, for this year, this stock price is probably at a good valuation. That's probably a good price. But 2025 is going to be here soon, and they have huge growth expected for both revenue and EPS. Look at revenue from a year ago, 15 billion. This year, 25 billion. Next year, 30 billion. That's a double up in revenue in just 2 years. Then same thing with EPS, almost a double up with EPS, 2.2 to 2.8. Next year, 3.7 expected, which is a huge jump. So from that perspective, today's stock price divided by 2025's earnings, now you're paying 11 times. Now it's trading at 11 times earnings, which is all the way down here, right? That's pretty cheap. I would say, I mean, that's like almost worst case scenario that it stays at this stock price for next year. But now that there's a better sentiment around the stock and the fact that this is not like it's not like this company is growing at 2% per year or something. This company has nice growth rates of 67% and then 20%. I'll say 20% is probably more accurate for next year. But and the EPS jump is huge too. So like even a 15 times earnings would be cheap. That would be really cheap. I mean, I could see the stock trading at 25 or 30 times earnings. I mean, if you compare, if other stocks had these growth metrics, they would easily trade at 30 times earnings, right? So 15 times earnings is not a lot at all. That's like if everything goes, that's like worst case scenario. So I mean, so if we say 15 times next year's earnings, we're looking at a stock price of $56, right? $56 for next year. That's like just base level. That's just a base case. Okay. Really, I mean, I don't know, even 25 times earnings is not, like it seems like a lot based on where it's at now, but it's not. I mean, that would be a $93 share price. So it's hard to say because the stock just generally trades at a cheap valuation. But I mean, it's been at 25 times, it's been at 20, 25 times before. So I don't know. Next year, I wouldn't be surprised if this stock was $90 a share. I just wouldn't. So even right now, the stock is not like it's just reaching a fair valuation right now today. So I think the stock has room to run. And that is all. I'm going to hold my shares and we're going to see what happens. Thank you for watching, and I will see you in the next video.